Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing and also give you a few key takeaways to help you navigate the markets yourself. So, this week, let's talk about June's stock market performance, just slowly churning higher, but underneath the surface, there's a bit of rotation happening with some of the laggards of 2021 starting to take a leadership role. Number two, the yield curve after the change in the Fed dot plot after the meeting last week. We started to see the yield curve starting to flatten. And finally, lumber prices, some of the raw materials, durable goods that really skyrocketed in price during the pandemic as consumers started to demand more durable goods. We started to see those prices plummet. Let's talk about that. So the S&P 500 just made an all-time high this week, but it's not without effort. It's been churning along for past several months, really just sideways. But as you can see, after the recent bout of volatility, tested that 50-day moving average, just slowly churning higher. Underneath the surface, though, let's take a look at what's leading. It's a different story here during the month of June. If you see here on the chart, we have 5 different buckets. On the far left, we have the best performing stocks in terms of the past 6 months percentage change. And on the far right bucket, we have the stocks that have performed the worst during the past 6 months percentage change. And then if you look at the actual bar chart, we have the return during the month of June. So what have we seen here? We've seen a lot of the leaders, think industrials, materials, financials have really gotten killed in June. Those have really lagged during the past 3 weeks. And then if you take a look at what's led, it's those old names, technology, healthcare, discretionary, some of those old leaders that have really been lagging during the recovery. They've started to take a little leadership role. And we've seen a bit of a rotation during the past month. Now, the Fed just came out last week and the dot plot changed. The dot plot is just simply what members are predicting for the future. And what's interesting is 13 members predicted that the Fed would increase rates in 2023. That's a year sooner than they previously had communicated. And they also displayed that they believe inflation expectations in the short term, although still transitory, they think they're going to be higher than they previously expected. What we saw here is the 2-year Treasury yield skyrocket up to its first 52-week high since 2018, while the 10-year really has just been muddling along, hasn't really reacted much at all. In combination of those two things on the chart here, we have the difference between those. The spread has started to flatten. That means the yield curve has started to flatten. Now, the worry is, of course, flat or inverted yield curve historically has been bad, but let's just be patient here. It's flattened a little bit, but it's much, much steeper than it's been 12 months ago during the recent pandemic. So we still got a really, really steep yield curve, but we have seen some interesting reaction in the bond market to the reaction, the Fed meeting rather. And finally, lumber prices down nearly 30% recently. I think it's notable because perhaps consumers are starting to change their behavior from how they behaved during the pandemic when we saw those big demand for durable goods. We saw the housing market skyrocket. Lumber prices were extremely high. I think mortgage applications are slowing. We're seeing consumers get back to some of those service activities that perhaps they weren't spending money on. They're not quite spending as much money on home improvements, housing sector, that momentum's waning just a bit. Combination of prices really starting to come back to normal. And by the way, supply chains are starting to replenish those inventories. I think you're going to see some of this in some of the pockets of the raw materials across the economy here as these inventories sort of catch up to that shift in demand that they weren't quite expecting during the past 12 months. And finally, I want to thank everyone for watching, but not without a pretty good feel-good story this week. In New Hampshire, a gentleman tipped a waitress on a $37 bill, $16,000. Said basically, you deserve it. I want you to have it. They thought it was a mistake. They followed up with the man, and he said, no. This was for you. They split it among the chefs and all the waitresses. They obviously had a really good day there, and it's good to see people get back out there and some of this goodwill being passed throughout. So with that, I want to thank everyone for watching, and I'll see you next time.